Hi, I'm Roger Montgomery from Montgomery Investment Management, and welcome to this week's video insight. If you've been watching closely, you'll notice massive volatility in the share prices of mining services companies. Why is this happening? Well, quite simply, there's a debate going on amongst investors about whether or not these companies are now too cheap, whether they're being priced as if they're going out of business when in fact they're not. One investor called me today and noted that the PE ratio seemed to be very, very low. Keep this in mind. The price to earnings ratio contains two parts, the price and the earnings. And yes, if you look at historical earnings, the price appears to be low. But it's always been our thesis that it is the outlook for these companies and not their present circumstances that looks like it's deteriorating. These companies are high quality businesses based on current performance. They're A1, A2 businesses, high rates of return on equity, little or no debt. But remember, the key ingredient in successful value investing is bright prospects. You can't simply close your eyes and ignore the outlook that is occurring for mining and mining services. The Bureau of Resource and Energy Economics has forecast that mining capital expenditure could fall as much as 75% between now and 2016-2017. If that were to occur, it would wipe 1.5% of our current GDP growth rate of 3.1% seasonally adjusted to the end of the December quarter. Okay, so what next? Well, the PE ratio may not be cheap. It might be that the E drops. Why aren't we interested in buying these companies yet? Because we think come the end of June, auditors will start turning up on the doorsteps of the offices and the head offices of these mining services businesses, and once they've looked at the books and the outlook of the companies, they will start to ask these companies to make announcements, be it downgrades or outlook statements or revised trading statements, and we will see, we believe, a deterioration come through. So we think the E could drop. Therefore, the PE, while it looks low today, may not be low in a couple of months' time, even if the prices don't move. So that's the view this week. Remember, it's just one person's view, and keep in mind we could always be wrong. We look forward to seeing you next week at the next video insight, and be sure to follow us on Facebook and Twitter.